Nvidia, the darling of the chip world, is flashing red. Once the crown jewel of the tech industry, Nvidia is now facing a significant downturn. The stock is down, caught in a bearish downdraft that's got investors sweating. The decline isn't just a minor dip, it's a substantial drop that's causing widespread concern. This isn't just a blip, people, it's a trend. Analysts are poring over data, trying to make sense of the continuous downward trajectory, and it's got everything to do with the broader market turning south. The entire tech sector is feeling the pressure, and Nvidia is no exception. We're talking about a tech giant that was riding high on the AI wave, and now it's getting pounded. The same innovations that once propelled it to new heights are now under scrutiny. The bears are out in full force and they're hungry. Market sentiment has shifted dramatically, and the bears are taking advantage of every opportunity. This is the kind of market that separates the pros from the amateurs. Only those with a keen understanding of market dynamics will navigate this storm successfully. Don't get caught on the wrong side of this trade. Caution is the name of the game, and only the most strategic moves will ensure survival in this volatile environment. So, what's fueling this bearish fire? The answer lies in the latest jobs report, which has sent shockwaves through the financial markets. Well, the latest employment data threw a curveball at the market. The numbers came in much stronger than anticipated, catching many off guard. The numbers were hotter than expected, and not in a good way. This unexpected strength in job growth has led to a significant market reaction. Strong job growth usually signals a healthy economy, but right now it's got investors worried about one thing: inflation. The fear is that this robust job market could lead to higher wages, which in turn could drive up prices. See, the Fed's been trying to cool down inflation with interest rate hikes. They've been steadily increasing rates to try and keep inflation in check. A strong jobs report tells them their work isn't done. It suggests that the economy is still running hot, and more rate hikes might be necessary. This means they might keep their foot on the brakes longer, and that's got Wall Street on edge. Investors are worried that prolonged high interest rates could stifle economic growth. Higher rates are bad news for growth stocks like Nvidia, and the market knows it. These companies often rely on borrowing to fuel their expansion, and higher interest rates make borrowing more expensive. As a result, we've seen a significant sell-off in tech stocks, with investors reallocating their portfolios to more stable, less rate-sensitive sectors. The ripple effects of this jobs report are being felt across the market. Now, there's talk about the Fed cutting rates soon. But here's the catch: investors are skeptical. They're not convinced the Fed's going to change its tune just yet. There's a real fear that inflation is stickier than it seems, and premature rate cuts could reignite the inflation fire. This uncertainty is poison for the market. It makes investors skittish, and when they're skittish, they sell. That's why we're seeing this broad-based sell-off, and why Nvidia is getting dragged down with it. Section 4. Nvidia's safety net support levels explained. Okay, so the market's shaky and Nvidia is taking a hit. The stock price is dropping and it's easy to feel anxious. But before you panic and dump your shares, let's talk about support levels. These are crucial in understanding market behavior. Think of these as safety nets for the stock. They act as a psychological barrier where buyers tend to step in. For Nvidia, that magic number is around $90 to $95. This range has historically been a strong support zone. If the stock falls below this level, it could trigger a wave of selling. Investors might lose confidence, leading to further declines. But here's the thing: support levels aren't foolproof, they can break. When they do, it often signals a significant shift in market sentiment. What's important is to watch how the stock behaves around these levels. Is it showing resilience, or is it struggling to hold? Is it bouncing back or breaking through? A bounce back indicates strong buying interest, while a breakthrough suggests selling pressure. That'll tell you a lot about the underlying strength or weakness of the stock. Monitoring these movements can help you make informed decisions. So keep an eye on those support levels. They are a key tool in your investment strategy, helping you navigate the ups and downs of the market. Understanding and utilizing support levels can provide a sense of security and guide your trading decisions effectively. Section 5. Navigating the choppy waters of short-term volatility. Listen, the market's a volatile beast, especially in the short term. Trying to time these swings is a fool's errand. Don't get caught up in the day-to-day noise. You'll drive yourself crazy trying to predict every dip and spike. Instead, focus on the bigger picture. What's the long-term story for Nvidia? Do you believe in the company's fundamentals? If the answer is yes, then don't let a little turbulence shake you out of a good investment. Section 6. The long game, keeping an eye on market trends. Now, I'm not saying you should ignore the market altogether. You gotta keep an eye on the trends. What's the overall market sentiment? What's happening with interest rates and inflation? These are all factors that can impact Nvidia's performance, but don't let them dictate your every move. Remember, investing is a marathon, not a sprint. Focus on finding solid companies with strong long-term growth potential, and then have the patience and discipline to ride out the inevitable market storms. Section 7. Stay informed, stay ahead. The importance of vigilance. Bottom line, we're in a period of uncertainty. The market's sending mixed signals and it's easy to get spooked. That's why it's more important than ever to stay informed. Keep up with the latest news, track the key economic indicators, and don't be afraid to adjust your strategy as needed. Remember, in the stock market, knowledge is power, and vigilance is key to success. Stay informed, stay vigilant, and you'll be well positioned to navigate whatever the market throws your way.